Now, let's move on to the formulation of the rules of the trend change, and learn to distinguish the short-term correction from a reversal of the market. To perform this task, we will also use several different criteria. Here we will use a special proprietary tool in order to determine the balance of power of market participants in any market situation. I'm talking about the technical profile of the financial instrument. The technical profile, or in other words, the technical passport of the financial instrument, is quite handy and useful analytical tool for any trader. No matter what style of trading you prefer, be it short-term, medium-term, or long-term, if you see the full picture of the price dynamics in the financial instrument on different time frames, then you can more effectively manage your open position, or portfolio, consisting of several positions. Apply positions hedging techniques. In a timely manner, increase or reduce your presence in the market. The technical profile of the financial instrument is the tool that allows you to do all of the above. First of all, the technical profile of the financial instrument shows the current status of all formal and actual positions, established in accordance with the rules of the trading strategies, from which the portfolio of the trader consists of. Also, all key weekly and daily support and resistance levels, the current level of average daily volatility in the instrument, ADV for short, the size of the spread, and some other technical information are specified here as well. It is obvious that the technical profile of the financial instrument reflects all most important and useful information related to the financial instrument in terms of technical analysis. In the diagram below, you can see the technical profile of one of the financial instruments, the currency pair US dollar versus Japanese yen. The technical profile of the financial instrument is divided into several sections that reflect the technical picture in the instrument from the perspective of the particular trading strategy. As you can see, there are LTS, MTS and ATS sectors, corresponding to the long-term, medium-term and short-term trading strategies. There is also the Sector D, which corresponds to daily time frame, the Sector SCP, which corresponds to scalping strategy, and the Sector ETC, which indicates other technical parameters of the financial instrument. In the appropriate cells of the status column are indicated the parameters of the current position in the financial instrument within the selected trading strategy. Here you also can see the direction of the position. Red color, short position; green color, long position; yellow color, no open positions. Formal position entry level, enter. Initial stop loss level, stop, as well as current trailing stop level, TS. In the appropriate cells of the balance column, BAL for short, is indicated the balance of power of market participants within the selected trading strategy on a 3-point scale basis. Bulls in green, bears in red, and neutrals in yellow color. Moreover, it should be noted that the number of points corresponds to the bullish, bearish, or neutral sentiment towards the base currency or asset. Finally, summing up the scores within all trading strategies, the overall balance of power in the selected financial instrument can be calculated as a percentage. This information is indicated in the rightmost column of the technical profile of the financial instrument, sentiment. The next slide gives some additional explanation of the information specified in the technical profile of the financial instrument. So, let's try with the help of the technical passport of the financial instrument to gauge market sentiment. Or in other words, let's try to define the balance of power of market participants within the medium-term multi-time frame trading strategy. In order to do this, we will evaluate each technical signal separately, using the binary system 0 or 1. What is the balance of power of market participants in the case of a strong uptrend or downtrend? In what manner should the points be awarded? Let's start with the situation when the market is in a state of well-defined uptrend. In this case, 3 points out of 3 possible should be credited to the bulls. The first point should be credited to the bulls for the signal generated by 3 pairs of moving averages, indicating the presence of an uptrend. That is, for the signal called bullish perfect order. The second point is credited to the bulls for the signal indicating that the last swing with an amplitude of more than 150% of ADV relative to the pair of short-term moving averages goes up. It should be noted that the fact of the presence or absence of the swings in the direction of the uptrend is defined by the extreme prices of the hourly candles, that is high and low. In order to make it easier to determine the presence or absence of such a swing, I also recommend using Fibonacci grid with a set of appropriate level marks on the scale. The third point is credited to the bulls for the signal indicating that the last swing with the amplitude of more than 100% of ADV relative to the pair of medium-term moving averages goes up. It should be noted that the fact of the presence or absence of the swings in the direction of the uptrend is defined by the close prices of the hourly candles. So, at any point on the uptrend, the balance of power of market participants will look like the following expression: 300. Accordingly, in the situation when the market is in a state of well-defined downtrend, 3 points out of the 3 possible should be credited to bears. The first point should be credited to bears for the signal generated by the 3 pairs of moving averages, indicating the presence of a downtrend. That is, for the signal called bearish perfect order. The second point is credited to bears for the signal indicating that the last swing with an amplitude of more than 150% of ADV relative to the pair of short-term moving averages goes down. It should be noted that the fact of the presence or absence of the swings in the direction of the downtrend is defined by the extreme prices of the hourly candles, that is high and low. The third point is credited to bears for the signal indicating that the last swing with the amplitude of more than 100% of ADV relative to the pair of medium-term moving averages goes down. It should be noted that the fact of the presence or absence of the swings in the direction of the downtrend is defined by the close prices of the hourly candles. So, at any point on the downtrend, the balance of power of market participants will look like the following expression: 003.